The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, we're going to have Rich Anderson back today. I was originally going to have him tomorrow, which is the commodity hour, but he's going to be busy tomorrow, so I'm going to have him on today to talk about, the volatility that we're having in the grain markets. As we spoke, last Thursday, these grain markets, totally collapsed because of the crop report, and we're having collapses in everything. They started a long time ago in most of these metals. They're just getting worse and worse. That's the bottom line. The first chart that I posted into Tiger TV today is the daily chart on silver, and it shows the double bottom and the triple bottom that we've had. But it also shows the perfect retracements that we had at the 50% level. We had a nice rally. We had another rally at the 61% level the same way. And then at the 786 level, we had a very, very small rally lasting 7 days. And it was in the midst of the time when, Cyprus was having all the problems. And we mentioned that if gold and silver cannot rally during, collapse of a bond market or a bank or something like that, and all the news that was going on, there should have been a huge spike in gold, and there was nothing. And that was the first sign. It could not even make an ABCD. We have some serious things happening in the metals market, so I want to spend the first part of the show giving my opinion of what's happening, because we're seeing major failures occurring across the board from these major numbers that we've been watching. Gold hasn't quite hit it yet, but it's just a matter of time. But we need to address this, because we've looked at it, and it's been so harmonic and so perfect mathematically that you have to respect it, at least if you believe in pattern recognition, and the ratios of the Fibonacci summation sequence. The next chart that I'm going to post is the weekly silver chart, and that goes back several years, and that shows that, if we're going to break much below 26, the next major support will be between $22 per ounce, which is the 786, and then the big ABCD with double bottom would be down at $14 an ounce that we made in 2010. This market has been under incredible pressure. We've had lower tops ever since 2011, and now it's starting to accelerate to the downside, which is certainly not a good thing to look at. Now, the next one that I'm going to post into the Tiger TV, of course, is going to be the XAU, which is the gold-silver index on the weekly basis. And several weeks ago, we saw the nice bottom come in at the 130 level, and we had a rally of about 5%, and the market got up to the 140 level. It rallied 10 points. And then just in a matter of just a few days, just the last couple of days, this market has shattered the 61% retracement with a big wide-ranging bar down, and now has really bearish implications, folks. It's going to take a miracle for this index to turn around, and that would be the same for gold and silver. In my opinion, it would be a giant bear trap if it did turn from here. But right now, this looks horrible for the gold and silver stocks. We started to see it the other day. We mentioned that the gold could not make that ABCD correction even in the midst of what was happening in Cyprus and things. And so this is telling you that when markets do not go up on good news, they only have one way to go, and that's to the downside. And if they don't go up if they stop going down when you have really bad news, they only have one other way to go, and that's up. So that's why it's important. But gold has broken down. It hasn't taken out the lows of 662, but it's only a few dollars away. I expect it probably sometime today. Silver has shattered it. Copper is still in a massive downtrend. It could not rally at all. Palladium, platinum, all of them are dropping. This is not good for economic growth, in my opinion. This is what preceded what happened in 2007 and 2008. But we'll wait and see if anything like that happens. But this gold-silver index is failing big time, and so we said if it ever got below that 130 level one more time that was not a good thing, and that's exactly what's happened these last 2 days. This thing has just literally started to melt down, which is a very, very ominous sign. Now I'm going to do a couple of different charts here for gold, and this is the one that we talked about just a few days ago. I'll repeat it again because it's very important, because it shows the fact that we were not able to complete an ABCD pattern in the midst of all of the things that were happening, in Europe and in Cyprus. And the old low that we're looking at down there at the we've already taken out the 1568 level that was the low from last March. The only one other level that's there is the 1552, and we're only $14 away from that level. So that gives you an idea of what you're looking at here. This market is just failed to respond, folks. That's the bottom line, and I don't think that it's going to have much of a move to the upside until something really really dramatic happens, and that doesn't appear like that wants to do that at this particular time. Now, on a long-term basis, if you're looking at gold here, we have some really big patterns that have happened over the past couple of years, and we could very easily get gold down into the 13. I'm going to post this into Tiger TV so that you'll be able to see it, into the 1370 area, and this would be the same pattern that we've been looking at in silver, but it's on a longer-term basis, of course, and gold is much better. But if gold gets to 1370, then it would be a good place to take a look at it, because then you have, the ABCD formation, and you would also have, a lot of your Fibonacci numbers coming together there. There's a 1.618 expansion at that point. So my assumption is gold is heading towards 1370. That's another $200 down. And believe me, 2 weeks ago I was bullish on gold, but as it couldn't go up, we were saying that there's some warning signs here, and we were not having any increase at all in open interest. In other words, no new buyers were coming into gold and silver, so they were not having any participation. And then when the market could not react, really strongly to the things that were happening, in Cyprus and other places, Korea. God, it used to be if a plane flew over Korea, gold would rally $70 an ounce. But that doesn't happen in a bear market, and that's what we've got going in all these metals. We've been saying that these commodities have been topping for quite a while, and they're breaking in the grain markets in particular. They're in disaster mode. That's why I'm having Rich on today, is to show you some of the the wild swings that we've had in these grains, because it makes the stock market look like a tepid cup of tea compared to a boiling cauldron of what they're doing in the corn market. Beans have held up okay, but wheat and corn have been totally decimated, which sets up a great opportunity, of course, 5 or 6 weeks down the road. But that's not ready. But we want to get some more information from Rich as we go through here, and try to see some of these things unfolding, and that's the main reason why we're going to have him on today, and also how to protect ourselves. Now, the last metal that I wanted to post into Tiger TV today, of course, is the copper, and we've shown these these ascending triangles that we had back in June of 2011, and then we had another one here in February of 2013. And it's beginning to break down more and more. Now, remember that copper has been going down almost daily. There's had a few day rallies here over the past couple of months, but since the end of January, copper has been in a severe downtrend. It's gone from 380 to 334. It's dropped well over 10%, and that's in the face of the stock market rallying. And this particular commodity has better than an 85% correlation with the stock market. That means that 85% of the time when the stock market goes up, copper goes up, and this has not happened. And that's a very, very, it's the same situation that we have in gold. You have some really, really good news to make gold, just take off like a ruptured duck, and it doesn't go up. And when it doesn't go up on good news, it only has one other way to go, and that's gravity, and that's to the downside. And so that's why you've got to pay attention to, the divergences that are occurring here at this particular time. I know everybody. We're going to after we have Rich on at the break. After the break, I'm going to share with you some cycles that one of my colleagues from London has done in the stock market, and they're related to the Fibonacci cycles, and I wanted to share those with you also. But we'll have Rich on at the half hour, and we'll talk a little bit more about this. But let's get back to copper, because I think it's a really strong indication that what they're telling us in the stock market is not what's really happening out there, because if things were really booming, people would need copper because it's used everywhere, and that's a very, very ominous thing. Of course, this is my opinion. I'm just a technician. I don't do the fundamentals at all. I'm just basically looking at what the fundamentals are trying to tell me, and that's the main thing of what I try to do when I'm looking at these things. And the next one that I wanted to post was the one that we did last week. And that was the price target that we were looking at for the NASDAQ, and that's using a 60-minute chart. You'll see that we went right up to that 2825 level, which was the exact number that the ABCDs completed at that point. This was the equivalent to about 1565, I believe, in the S&P. The Dow Jones, I don't really look at it very much because it's only 30 stocks and they're price weighted, and one or two stocks like IBM and a couple others, that are really high priced, and move the market more than they should, and that's not really fair. You really need cap weighted stocks like you have in the New York Stock Exchange Index, and that's telling you that the market is certainly not making a new high by any stretch of the imagination. And that's the real key, to why I am so, afraid right here for the bullish camp, because, if you look at this chart that I just posted, the New York Stock Exchange Weekly Index, you can see that the NYSE has not closed above the 786 retracement of the 2007 high, whereas the Dow Jones has made a newer high, and it did it in a beautiful, perfectly symmetrical pattern. So we got to take a little break here. And we get back, we're going to talk about the VIX index, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and I'm going to post into Tiger TV the long-term VIX index. This is the one that Basil talks about on his show that I enjoy because he really does a thorough examination of it. And all I would like for you to do, if you get a chance and you like cycle theory and you like patterns, is to take a look at this chart because it has a beautiful 3-year cycle, that is due to be bottoming, right now in the spring of 2013. But I think the important thing, if you have a chance to look at this chart, is you'll notice that the peaks of each of these cycles, the peak that occurred in September of, in October of 2008 in the midst of the crisis when the VIX got up to almost 90, was exactly at the midpoint of the cycle. In other words, exactly halfway through that cycle is where it actually topped. And then it went down into 2010. That was in the April period. And then you'll notice that the next 3-year cycle, it again also peaked exactly in the middle of that cycle. That is called mid-translation. In other words, that is a very harmonic thing where it goes from low to the high and high to the low. Time up equals time down, and that's what we're looking at right now. We're looking at this particular pattern that should be bottoming at this particular point, and we have a butterfly pattern forming also in the VIX index. And of course, as we all know, there is absolutely no fear in the markets nowadays. I mean, there's I think we're up 11% in the Dow for the year, and if you find a bear on TV there, they usually give him about a 10-second spot So it's a very, very dangerous time, in my opinion, to be buying stocks at this point. So we'll see what happens in the next particular go around of what we're looking at. Now we're going to we only got, this is a really short segment here, so I wanted to show what I think is one of the most important charts that we have, and that is the long-term weekly chart of the cash S&P versus the bond market, because this is what I think is the big bubble that is going to be the big surprise. We have stocks going straight up and yields going straight down. People are clamoring for yield. They're willing to pay up to buy junk bonds in order to get a higher yield. That's every time they've ever done that, it's been a disaster. I don't think it'll be any different this time. So, people are, trying to get the best yield possible. They're forgetting about any risk that's involved. And if you look at the spread that we have there in the last 18 months, it's never been this way before. So we are in some type of a bubble format. The question is when will it turn and how? And we're also forming, this huge three-drive pattern, in the S&P. We haven't quite made a new high in the S&P on the weekly basis. The reason why I know that is that the CNBC, when I turn it on in the morning, they have a little clock in the lower right-hand corner. It's like a time clock that shows how many points will be necessary to make a new high in the S&P 500 index. And I think it got to within 5 points. I don't know where it is today, but that's it's a moot question of whether it makes a new high or not, because it will just be, a double top in my opinion. But we'll see. The reason why, it's the New York Stock Exchange Index is the real market, and that is not making new highs. It's just at the 786. The NASDAQ is just making a 786 retracement with a head and shoulders pattern. I mean, all of these things are telling us that, these are not times to be, really getting really bullish stocks. There's no other way to look at it, that I can see. In order to be safe here, you have to be able to, protect yourself, and that's the best thing you can do. The other thing is we've not been going up in the transportations or the Russell. Also, they have been, having down days all along. So that's another thing that it should make you a little bit scary. Really, this market has gone up a little bit since February, but not very much, and it's only been a few Dow stocks and some others. Someone asked the question: do I still stand by my price objective in Apple of $394 a share? And I absolutely do. It's trading at $431 today. It was up about $5 or $6 earlier, but I don't see any reason why that stock's not going to make $394 and possibly lower. But it's got every technical indicator that says that's where it wants to go. And now we're only, we're only 5% away, so it doesn't take very much, to get there. If the rest of the market would weaken up, the Apple will most probably, go down because it is, weaker than a market stock. We're going to take a little break here. When we get back, we're going to have Rich Anderson from Anderson Capital Management on.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we're back, and we have Rich Anderson from Anderson Capital Management on the line. Are you there, Rich?
Yes, I am. Hi, Larry.
Hi. Originally I was going to have you on the commodity show tomorrow, but since you're going to be busy tomorrow, I would ask you to spend a few minutes today, because when we were talking last week about the very bearish grain report, and from what I've seen from you, that this thing is sort of a needle breaker. It's a game changer of some kind. Is that correct?
That's definitely correct. But the key point that I want to emphasize is that for your listeners is that when the markets limit down on the futures, they still have an opportunity to get out through the use of options. Mm-hmm. And so last week, even with limit down, you could have gotten out at like 685.
And that's a good $2,000 from where it is now, isn't it?
Yeah.
Now,
right.
Isn't that a strategy where you need a broker or you need someone that has really good experience, to understand how options work? I mean, someone that's a neophyte certainly couldn't operate like that, could they?
No, but a synthetic futures position where you'd buy a put and sell a call, it's not that hard to execute. In virtually every platform, you could put your own order in electronically. But yeah, if you're working through a broker and he doesn't know about synthetics, options, positions,
get another broker. And the people that trade, too, should take the responsibility for themselves and also learn how to do these things, because anybody that's silly enough to go into a report, either long or short, has to know how to do these things, because the risk is tremendous, because this is setting up what I think is going to be a tremendous buying opportunity once the planning is in and we get to around, probably the end of the middle of May to the end of May, just like we did last year when you suggested that we were going to have something dramatic happen, and we're going to be down near those prices again, it looks like.
Yeah, so I'm actually kind of excited. I think it's going to set up some real interesting opportunities. But in the meantime, anybody that had been long or gotten long prior to that report, and if you're going to trade in front of a report, you need to know how to exit a position with the options if it goes limit, so you can control your risk. That's the key thing.
Yeah. Remember back in the old days when the limits were 10 cents and it would go limit 5, 6, 7 days in a row, and we couldn't get out? I mean, I got trapped in a few of those, and I know you did too, when we were young and naive. Well, now we're old and naive.
Yeah.
Hey, Rich, the other reason you have another report coming up that's important that we were chatting about. That is in April?
That's April 10th. That's a supply and demand report. With that supply and demand report coming out, I would expect that the markets will catch someplace in here and stabilize and rebound some, as the shorts won't be willing to press the market down much in front of that report. That because the next report could give you a surprise. And I might add that the surprise we had in the March report, I think it's happened like 6 or 7 times in the last 10 years on these reports. USDA comes out with these curveballs, shall we say, and they're often adjusted. And the next chance where it's likely to be adjusted will be in the June report. So just be aware that they gave us a bunch of bushels in March, and they may take them away in June. It's just a number on a piece of paper to them, but it means a lot of money.
It's real money to us, that's for sure. Now that's on April 10th. That comes out before the opening, doesn't it?
That's another one of these 11 o'clock deals, 12 o'clock time.
Well, we'll have you on the 11th of April next week on Thursday, and we can discuss what happened, and we'll go over some of the numbers.
All right, that sounds great. But one last thing before I leave you. Starting Sunday night, we open at 7 p.m. on the grain and close at 7:45 a.m. in the morning, and then reopen the markets at 8:30.
Oh, wow.
So that time change starts Sunday night, 7 o'clock.
And that's Eastern time?
That's Central time.
So, yeah, if you're in Central time. Okay, so that's a good thing to watch. I'll mark that down.
7:45 a.m. in the morning, then there's a 45-minute break, and then we start trading at 8:30 rather than in the old days it was 9:30, in the pips. But
one other question, Rich, before you go, if you have a second. What is happening? We're seeing collapses in silver, gold, copper, and everything else. You hear anything from hedge fund liquidation or anything? Any of the hedge funds that might be in trouble or anything? Any news at that end?
I think it's just continued reallocation of funds, like CalPERS here a month or so ago. The California pension funds, pulled their asset allocation from the futures markets, and I think you're continuing to see more of that, and that's where you're seeing pressure on gold, silver, crude oil, gasoline. It's across the board today, for the most part, and it's some asset allocation. They've made a decision. They're going to go from maybe 5% to 4%, but 4% of billions is a lot of futures contracts across the board.
It certainly is, and as we're speaking, gold has taken out that support at 1562 we had for several weeks. So listen, thanks a lot for going to the extra mile and coming on today, and we'll see you on the 11th of April.
And by the way, the CME and the CBOE both have excellent websites that teach you about synthetic positions. So
that's just CME.com,
Anybody
right?
can learn about it.
Yeah. Okay.
Take care.
You bet. Yeah, folks, if you do have want information on the commodities, if you go to www.cme.com, that will give you the information that that you need. We have now broken below that 1560 level in gold that we talked about when we started the show, and it looks like it's getting ready to to go a little bit different. Now I'm going to change focus here a little bit. I'm going to talk a little bit about some cycle work. This is based on some Fibonacci things that I think it's interesting because a lot of these things repeat themselves, over and over again. And if I can just get my camera to work, and there we go. I posted in there the Dow Jones Industrial Average. This is a chart from my friend Tom Hugard in London. He does a lot of real interesting cycle work using the numbers of the Fibonacci summation series. And this is basically, showing you that at the end of March, and this was he sent this to me, several weeks ago. So this is it's coming due right about now. We got a call from Roger in Washington. Are you there, Roger?
I am, Larry. How are you this morning?
I am good, sir. What can I do for you?
Well, I'm looking at CF and some of these other fertilizer stocks, and I was wondering how that works or dovetails in with
the grains.
With the grains, yeah.
Wow, this stock is 185. What is CF? I don't know. What is the name of the stock?
Oh,
you know what CF is?
It's CF Industry Holdings.
Okay, so then it's probably in a lot of different petrochemicals and all of the nitrogen fertilizers and things like that.
Right. Yeah, it's like a pot or MOS.
Okay. I've got the chart. I'm going to post it into Tiger TV, and you'll see that it made a major butterfly pattern back at the end of January up at the 234 level, and right now where we are is we're at the 61% retracement of last May's low. But frankly, we're not looking for a bottom in this for quite some time. So what I'm going to do is I'm going to repost this chart into Tiger TV and show you the longer-term Gartley pattern that is there. And this is where I'd be really watching the stock. It's about $20 away from where it is right now. It shows it coming in at around the 165 level, but it's certainly it's a very good technical picture for a stock, and it looks like that's where it's headed, is around the 165 level.
Really? Oh.
Yep. That's what it looks like to me. It's got some, it's got a beautiful ABCD pattern there. We've broken below the February lows. The 61% retracement of the low from December of last year comes in at 165. The 786 of the low from May of last year comes in at 165, and the ABCD comes in at 165. That's Mother God and country.
No kidding.
Yeah. Well, you take a look at it. It's really, it's got a lot of. Go into Tiger TV and look, because it's a very harmonic stock. It trades really nicely, and I don't see any reason why it's not going to go there. That's what, and not only that, but you have bearish fundamentals because, as Rich said, we've got some more bearishness coming, and but this is an ideal situation. If you get this thing into May down there, that would, and the grains are bottoming, that's when you want to be looking at it, because they're selling this stuff quite. They're selling their products now to the farmers because they're getting into planting right now, because we're into April. They're already starting to plant corn, and then beans will be planted at the end of April, early May. So they're going to be selling their products, at that point. So this would be a stock to look at $1.65 at $165.
Yeah, I was wondering why it hadn't turned around here a little bit because of the planting season coming up. There's a perfect example, Roger, of what we were talking about earlier in gold. When things don't react like you think they should, in other words, with planning, you'd think they would be buying more and more of what they should be, and if the news is really bullish and prices don't go up, they drop by gravity. That's the bottom line. So that's one thing I've always followed, is to see how the market reacts to the news, because if it reacts poorly, that's a really, really bad sign, and you don't want to stand in front of that under any stretch of anyone's imagination. Well, would this be a short then?
Well, you can't short it here because you're down for you're down 10 days in a row here, and I certainly can't sell it because it's been straight down since 210, and we're at 185 now. But if you were to get a rally back to that 198 level, I would certainly take a look at it there, possibly from the short side. But selling something 10 days in a row for me is, I might as well write a check to the New York Stock Exchange and let them cash it, and I can save commission, because I don't sell weakness very well at all. That's the understatement of the year. It just doesn't work for me.
I see. Is it just that it doesn't work for you, or it doesn't work for anybody?
It just doesn't work for me. Well, I do better by watching the patterns and selling into strength, because then I'm able to quantify my risk better. I try to quantify my risk by looking at the patterns and the ratios together. But breakout trading, I tried that several times. Where it breaks out of trend lines, and sometimes it works, sometimes it doesn't, just like anything else. But what works for me is for watching for Fibonacci retracements into a downtrend. Like if you get a retracement here up into that 198 area, that would be a 61% retracement of the 210 high, and that would be a good place to sell it short. That increases your profit objective by a lot, and it also reduces your risk by a lot, and that's what trading is all about.
Yeah. So you'd look for a retracement up into the 190.
I'd say 190. I'd say 190. 198 is what I'd be looking at. I just looked at it, and it's 198 is what the number is. In fact, I'm going to put that in I'm going to make a limit, or not an order, but I'm going to put an alert in that if it gets to that level, I'll notice that, and if it's during one of the days that I'm on the show, I'll post it with your comment, and we'll see if in fact it does this. But I certainly can't sell it here because it's setting at a 61% retracement of the last high. So it's due to rally. It really is. It's ready to rally right now. If you had to force me to do something, I would buy it and risk $2.
I see. Yeah.
Because buying it here is at a 61% retracement. That's what I like. And so if I buy it at 185, I could stop it at 183.20 or something like that, and only risk $2. And my profit objective would be, 198. So that's 5-to-1 in my favor, and that's what I look for.
I see. Yeah, I was wondering about it because it was getting so low. I mean, it's really, really just. It took out that previous low of 195, and that was back in February. Yeah.
And that is also an important number too. That 195 is also a 1.27 expansion of the high from 2010. So you have three things here that are telling you that this stock is getting ready to rally. You have a 1.27 expansion. You have a 61% retracement, and also you're in a situation where you're down 10 days in a row, which is an outlier event in itself. You have to go back a long time to find the number of times this stock has dropped, 10 days without a significant rally. Yeah. So those odds are, and the other reason is you'll find very few people that want to buy it today. And that's actually a good thing, I think, because you want to be on the other side of it.
Yeah. Well, would you look for a tail on this candlestick here to?
Just buy it. You're a rich guy. You can put a $2 stop on it. No. Look, look. The low that I'm looking at is 184.77. Okay, that's what I'm looking at. And today's low has been 185.18. So I would try to buy it at 184.77 and stop it at 182.77. Just risk $2 on a $185 stock. And then if you lose on that one, you're going to get a chance to buy it at 165.
And that would be a buy point, yeah.
Yes, sir. In my opinion, it certainly would be.
I see.
Well, I really like the call. You asked every good trading question you could possibly ask. That's terrific. I wish I could get 10 people a day to call in during the show. It'd make my job a lot easier. Hey, thanks a lot, Roger, for calling.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we have a caller from Chicago, Illinois. Doug, are you there?
I'm here.
What can I do for you, my friend?
Larry, I just ran into something. I enjoy your program very much. Anyway, I'm a first-time caller, okay?
Okay.
I listened to all the programs. Anyway, I ran into something with Fidelity. I thought you might be interested. You might not be interested. I don't know. But I own a stock called DZZ.
Yes?
Which shorts the gold funds. You short the gold 2-to-1.
Uh-huh.
They won't let me buy anymore. But I can sell it.
Oh,
you ever hear anything
boy.
like that? I said, "What are you people? This is my money. What I want to, I said, what's going on here?" I just thought you might be interested in something like that.
That's very interesting because that is very unusual.
Yes, it is. They put a restriction on it. I says, well, "What the hell is this? I want to buy some more of this thing. I can't buy it."
It could be they're lopsided on the stock. They might have put too much of it out.
Okay.
And that could be the problem. But this happened a few times when I was at Drexel, and this goes back many years ago when there was only there were only 800 issues, only 1,300 issues on 1,600 issues on the New York Stock Exchange. You couldn't get stock to short because none of the firms would lend it out.
Well, this is a short fund.
Yeah,
it shorts gold 2-to-1.
Well, I'm not a big fan of Fidelity. I think.
Yeah. Okay. All right.
That's just my opinion. I think it's a very safe place to do business, but their fees are rather rather high.
I never ran into. I've been with them 10 years. I never ran into something like this.
I've heard it a few times. I really have, Doug, but not very
And especially what's going on with the gold, especially right now today.
Yeah, gold is under pressure.
And I'm saying,
so we're breaking down now. We're below the 15.
Yeah, well, I wanted to buy some more of this. I mean, I couldn't buy it. Actually, I bought some yesterday.
Mm-hmm. But you
so
couldn't
I wanted
get
to
it
buy
today.
some more, and I can't buy it. I says, I can sell it though, right? I says, this is my money, not yours. Let me do what I want with it. Huh? I mean, who do you think you are, the government?
Yeah. Well, yeah. There you go. That's a good analogy.
Okay. Well, I won't bug you anymore. You're almost off the air anyway. I see 5 more minutes.
Yeah. Well, no, but it's good to know because of the fact that there are limitations that some of these firms have, and they just don't allow you to to do things. So what are you going to do?
Yesterday they did, not today. That's why I'm just curious now.
Well, it's good. This is the one good thing about Tiger TV and the Tiger Den and everything. We share, experiences like this because some people that don't realize that something like this can happen, it can happen, and it can be very, painful. Like MF Global and Peregrine Financial, PFG Best and Lehman Brothers and Bear Stearns and all the others, because there's going to be more of these coming down the road. I don't think there's any question about it. There are going to be more of these problems pop up because nothing's really changed. The Fed, dumped in a bunch of money, and they're doing the same thing. They're playing with poker chips that don't belong to them.
Yeah. Well, I enjoyed talking to you. Okay, I just thought
thank you for calling in. We really appreciate it.
And I've never seen anything like that, but what can I tell you?
Yeah,
all right, thank you very much, Larry. Good luck.
You bet. Thanks a lot.
Bye.
Okay, folks, let's live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.